Dear guests, please take your seats as we're about to start the final speaker session here in the center stage. Digital currencies in 2024, between traded assets and payment enablers. Join me in welcoming our moderator, Felipe Perez, Director at Fintech Services South Africa, who will introduce his panel. Andres, the floor is yours.
Thank you. Well, this is the last one. My name is Andres Perez. I am the founder of Fintech Services, and I'm also the founder of the Fintech Association of South Africa, a non-profit organization built to unify the industry. We're going to start with each of our panelists, so if you can introduce yourself, your name, your company, and yeah, let's start it.
Awesome. Marius Reitz. I'm the General Manager for Africa at Luno. We're a global cryptocurrency platform, the first cryptocurrency exchange to start operating in Africa back in 2013. We've grown to over 40 countries now. Team on the ground in SA. We offer investment opportunities to retail customers, but also to businesses. And we currently predominantly have a presence across emerging markets.
Gianluca Sacco. I'm the Chief Operating Officer of Valor.com. We're also a global cryptocurrency exchange, founded in 2018. Our product set includes spot trading, futures trading, and trading spot with leverage as well as staking products and payments. Also active in South Africa and other emerging markets with a current focus on expanding into new regions, including Asia and the rest of Africa.
Eduard, Melkostupov, FBS online trading company. I'm responsible for education there, so I've got into crypto with a coincidence in 2017, I think. And after that, I understood that I like education myself. Then, year after year, I started educating others, and here am I sitting with you guys. So, just a couple of words. FBS, online trading company, and an educational project aiming to bring more power to traders of all sorts and kinds. So, yeah, thank you.
Hi, everyone. My name is Matt. I'm an expansion manager at Tether. Tether is a company that issues the world's first and largest stablecoin, USDT. And I work with them to expand their effectively go-to-market strategy and implementation on the continent.
Awesome. So I think that let's get started. I want to start with a little bit of background where cryptocurrency is in Africa. Out of the top 10 countries with the largest holders of crypto, Nigeria is number 4 with 22 million holders. South Africa is number 5 with 7.7 million. And then Kenya is 7th with 6.1 million users of cryptocurrency. So it is a large number of users in Africa that use crypto. They use it either for investment, mostly in South Africa it's for an investment purpose. Others use it as a hedge against currency inflation. Then others use it as a payment method. Then others use it as different things. But those are the 3 main cases in Africa. So now, one of the things that I think that we have to look into first is it's a boring topic, but it's not so boring, which is regulation. So over the last year, there has been a lot of changes in regulation. Last year, the FSCA issued the notice in a directive, which declares crypto assets as a financial product. There were about 355 applications received, and up to date, they have issued about 75. 2 of them were Luno and Vala. Luno has a category 1, and Vala has a category 1 and 2. So now, I want to ask you guys, how does this regulation affected your business model? How does the consumer benefit, and how do you as an exchange benefit from having regulations? Because it is clear that the industry has been asking for a regulation for crypto to build consumer trust, protect consumer, and everything. So how does this regulation affect your business?
Yeah, I think at Luno we have built our business since the early days on a compliance foundation. So we've always had a compliance-first approach. We've been pro-regulation from the first days, and we've complied with regulation as much as possible, the regulation that applied to existing financial institutions. So we've actually had to do little changes, to our model or to our processes or controls since the designation of crypto firms as CASPs. I think. Maybe just taking a step back, I think the crypto market will continue to grow with or without regulation, and Africa is really a testament to that. The growth in Nigeria, countries like Kenya, but I think a little bit of regulation and pragmatic regulation will really reduce a lot of operational risks in the market. So companies with proper corporate governance that are able to assess their risks, that are able to mitigate the risks they face in the environment, ultimately providing a safer environment for the customers is critically important. So I think the license for Luno was the natural evolution of our business, and now we've seen the business grow, and I think it's opening up exciting opportunities for different classes of investors going forward.
I think there's an incorrect stereotype that crypto and regulation don't get on. We're looking to build our business for the long term and fully expected from the very beginning that regulation would play an important role in the adoption of cryptocurrencies. As Marius has mentioned, you can't get away from consumer protection without engaging. You can't have consumer protection, we say, without engaging with regulators and having thoughtful and proactive regulation for markets. And we've walked step by step with regulators to try and assist them with understanding the crypto markets properly, and hopefully being thoughtful about the regulations that they promulgate. It's led to a significant uptick in interest after we were all licensed by the FSCA, specifically in the institutional space, which I guess is interesting, right? Like for in fact a few years, Valor has been building in the direction of expecting institutions to start investing in cryptocurrencies, and the market globally has played out in this manner. You've seen the spot Bitcoin ETFs, and soon possibly the Ethereum ETF, fingers crossed, let's see, be added or allowed in the US, and that's already we've seen that's led to a significant uptick in the amount of institutional investment and adoption of crypto assets. And I think that's going to continue to grow as well. I think it's an important enabler, and where businesses have planned for the long term and built features and products that serve a much wider audience, including institutions, I think they'll do well. And that's what we've tried to do as well.
Okay, so what we can take from these short words, the licensing regime has opened new doors for crypto exchanges to expand, because before your bread and butter was the retail market, which was people, first-time users that will buy crypto. They will hold their crypto. I think South Africans hold their crypto for up to 176 days. Which means that we are big holders compared to the likes of Europe and other countries. So most of the Bitcoin or like the cryptocurrency that is purchased by South African is most on an investment, and it's a long-term investment. So I think that the user has the understanding that it's not a get-rich-quick scheme that I buy Bitcoin today and tomorrow I'm going to make some money, but rather like a long-term investment. So, all right, so let's actually, Luno, you recently have expanded into the institutional crypto side, right? Which will essentially help you grow, expand into different markets, learn different things, the same as Vala. Now let's talk about the ETF. In South Africa, Bitcoin ETF at the moment is not allowed. The regulation that was drafted to protect consumers against any of these scams, whatever. Now, if I go, some of the crypto exchanges have gone to the JSE, have asked for approval. They can't get approval because, in essence, there is no regulation for that. Now, the lack of regulation in ETF Bitcoin, how does that affect your business?
So I think for Luno, yes, I think you're absolutely correct there. We have recently started positioning Luno more and more as a crypto avenue for institutions as well. We've always offered the institutional capabilities in terms of businesses being able to open up accounts on Luno, access to our trading engine, to liquidity, to locally ring-fenced custody in SA. So I think the shift to institutional for us was relatively easy. We've spent a lot of time over the last 6 to 12 months working on our API. We've improved the throughput of the API, so recently expanded that to around 18,000 orders per minute. The API's latency, account management for top customers. We've expanded our coin selection as well. So I think we're starting to position ourselves as a lucrative avenue for businesses. For crypto-specific businesses, so for professional traders, for businesses that trade crypto as their permanent or full-time business activity. Now, yes, there's significant interest from institutional perspective. I think we need to look at the US and SA as being on different adoption curves from an institutional perspective. We've seen the 11 ETFs being approved in the US. And whilst there's interest in SA, I think there remain some significant regulatory hurdles still for us to navigate. And specifically the Financial Markets Act, which currently in its current form excludes crypto from being included as an underlying asset in any collective investment scheme. So I think similar to how the industry lobbied for the FSCA license regime, lobbied for the FIC accountable institution updates. I think it will have to be a collective effort from the industry again over a period of time to lobby for the updating of the Financial Markets Act to enable crypto assets to be included in ETFs, in unit trust, and to be able to, for investors to be able to safely trade crypto products on the local stock exchanges. And I actually think the absence of that is creating an investor protection issue, because investors will, if they want crypto exposure, they will find crypto exposure through less transparent avenues, and in the process expose themselves to risk.
Yeah, I think I agree. I think in the immediate term, the lack of a tradable ETF in this particular market means that those that want exposure will find their way to other venues. Hopefully they come to the likes of Valor and Luno, right, and don't go elsewhere. And so in the short term, it impacts our business in a favorable manner, but it's actually not ultimately the intention or the goal, I think, for the industry. We would love to see an ETF that people can trade through traditional brokerages, because that improves distribution effectively. What might be interesting, right, is that the actual sources of liquidity are ultimately our exchanges. Yeah, we've built a source of liquidity where on Valor there's $25 million a day presently that's traded, right? And that depth of liquidity comes from a long time of building up our order books. It's difficult for that to be taken away from exchanges like Valor and Luno, right? And ultimately what might play out is that when traditional exchanges want to get involved, the source of liquidity is still the same. They would plug into our APIs, source liquidity from the crypto exchanges, and ultimately everyone would benefit from a single or a couple of sources of liquidity that's concentrated and allows people to trade at a fair price. So ultimately, I think more business is driven to the crypto exchanges in the immediate term, and in the long term, the exchanges continue to benefit as the regulations are more solidified. Let me say.
I think there's a lot happening in the crypto space, and I think a lot of people are trying to still understand what is this, how does it work, how, like, you know what I mean, like from an end consumer side, people know about Bitcoin, they understand. Like, I was gifted a hoodie from Luno, and every time I wear it in Cape Town, people come and ask me, should I buy Bitcoin? What is this? I recently came back from South America, and you don't really see that adoption in those countries. Here you land in South Africa, you see a Bitcoin ATM, you see Pick and Pay now accepting Bitcoin as a source of payment. So I think like we are there, but we're still lacking a lot of education and a lot of consumer understanding. First, what is the risk of trading? I always say, like, don't count with the money that you trade, because you can lose it at any second. So I think on the education side, what are some of the strategies that an exchange or like people should consider before trading in Bitcoin, trading any cryptocurrency? Because there is a high risk, there is a high volatility, and a lot of the people will generally lose their money. South Africa is well known for, you know, like people promising like high returns and then they disappear. So how do we educate the end consumer when it comes to what exchanges to use and how to trade in those?
I think referring to the first thing you said about people asking whether to buy or sell Bitcoin, I think this is the main problem here with the market. People are trying to think about cryptocurrency as get rich easy scheme and all this stuff. So they do not try to look deeper often into the cryptocurrency. They tend to think about themselves as ones who understand the inside nature of the crypto. They look through some, I don't know, YouTube channels or some other channels, and they think, oh wow, this crypto looks cool and sounds cool, I'm gonna buy it. And they think about themselves like a crypto enthusiast, which, well, I'm not quite sure they are, because they are just trying to speculate on it, thinking about themselves like they're not. And also, like, do you want to add maybe?
Sure. So maybe talking from a Tether perspective, and one of the reasons why I think Tether has grown as quickly and as fast as it has is because it doesn't actually require that much education around it, right? It's a digital dollar. It's very easy for people to understand that and therefore use it as almost like you could use a USDT wallet as like a transactional account. So in terms of education, I agree it's super important. From a Tether-specific angle, we're also really trying to push that across the continent, doing tours across universities, working with various partners like Luno and Valor, hopefully in the future, to try and increase education around stablecoins and Tether specifically. As for exchanges, I guess you need to do your own research. You can take a look at a track record. Both Luno and Valor have been like very reputational. They've got their licenses now. I think you need to do a lot of your own research when it comes to this type of thing.
Yeah, I agree with that, definitely. And also speaking about what should traders consider when investing in cryptocurrencies, well, there is a pretty good advice, like don't invest what you can't afford to lose. And also, if you invest in cryptocurrency, there is often a situation, probably it's with every bull run in crypto, every 4 years or so, people invest in cryptocurrency, the account grows stronger, they become more proud of themselves, and they do not withdraw their profits. So every time they just keep on adding more money into the system. I think Tether had like more advanced systems. You print tethers from time to time, and sometimes you burn them, so you eject liquidity from the system. And people, they are just not trying to eject their liquidity from the system, not trying to withdraw their profits. And that's, I think, one of the biggest problems with every crypto bull run, right, like the one we have now. People are just getting too confident about everything. They start to think that it will never end, and then suddenly it ends.
Yeah, and I think now let's touch that topic of where Bitcoin is at the moment. I think if anybody owns Bitcoin here, it was going down, and we had the crypto winter, FTX, the USDC unpegging, the crypto value collapse. So we had like pretty tough season, but it has shown that the crypto industry is very resilient, and I think it has come back stronger than what it was. I think that the industry has learned from previous mistakes and have built a more solid ecosystem that will benefit, obviously, everybody. So over the last year, we have seen a 100% increase of the price of Bitcoin. We have seen 104% increase on Ethereum. And then recently, we have seen 804% on the Solana. Most of it is based on the network, on the meme coins, AI, all of that, which we're gonna touch now. So now we've seen a massive growth, right? It has to get to a point where to say like, am I too late to buy? Should I buy now? Should I not buy? What is your prediction? And please don't take this as a financial advice, because this is our own sentiment and what we believe. But what is your sentiment with the price of Bitcoin, and obviously Ethereum now with the ETA, with the ETF, hopefully it's going to go up as well. So don't take this as an advice, we just want to get your sentiment.
I think the more we speak about it continue to grow, the more it is priced in the market. It's like, I don't know, when Bitcoin is rising, then Ethereum is rising, then all other altcoins is rising, and it was like that for the last two cycles, and maybe a lot of people are believing that this time it will be the same. And this time, some coins like Solana or meme coins inside the Solana ecosystem will show like thousands and hundreds of thousands of percents. And the more I hear it from people there, from my friends, from people I don't even knew they were like involved in crypto, the more I'm afraid about all of that, and the less faith I have into the real like bull run and ultimate alt season really happening. Because The last time, 4 years ago, it was a great injection of monetary supply into the system. Yeah, it was, the narrative was like that. This time it's ETFs and another injection of money. But this time everyone seems to be prepared for this growth. Everyone seems to be invested already. And well, maybe it's just me getting more involved in the crypto. Maybe guys, you disagree with me, but it seems like everyone is already inside the market and everyone just waiting for the train to start. And who will be the fuel this time?
I mean, if I can comment a little bit further, I think one of the things that we're observing every few years or so is just cycles of adoption, right? I think 2020 was a particular market cycle where there was a capital injection into the global economy, and this cycle for sure, ETFs have potentially driven a whole new host of potential users or investors into crypto, right? It's really easy to get excited or depressed about short-term market price movements, right? And crypto is renowned for this. You can see 1,000% growth in a particular asset that's in a day. That can happen. My view is, as with any sort of investment, you need to do your homework and you need to do your research and you need to build conviction in the assets that you want to hold for the long term. And for me, that means slowly just continuing to invest in what I believe in, right? Which are some of these assets that you've mentioned. I won't be specific. And then I don't care about market cycles and movements on a day-to-day basis. It's kind of noise, right? There are for sure opportunities and people take advantage of short-term price movements. That's fine. If you're able to do that with consistency, I take my hat off to you, right? But that's not my game.
Yeah, I think it's simple. You look at the supply and look at the demand. Many factors influencing the demand for crypto, like Bitcoin. Positive news around ETFs, so it's becoming easier for institutional investors and retail to invest in crypto without having to navigate, the way around the crypto app. Regulatory updates and changes, security breaches, hacks, scams, so many factors, and similar factors that impact the prices of stocks and commodities also have an impact on the prices of Bitcoin. But the main difference is Bitcoin has an inelastic supply curve, right? So, and that makes it highly, highly volatile. And that's why you see the spikes, why you see the increases in the drops, because with changes in the demand, there's no proportional change in supply. Bitcoin has a known supply, and actually with the last Bitcoin halving, the supply rate has dropped even lower. So I think when you look at the volatility, you need to look at it in that context. The more the market matures, the more capital we see flowing into the market, and the more long-term capital we see flowing into the market, the lower the volatility will drive. So I agree with Gianluca. I think if you're an investor, the best way to ride the volatility is to consider strategies like rand cost or dollar cost averaging, where consistently on a monthly basis you buy into the market, and then over a period of time you average out your cost price.
Now let's go back into liquidity, because USDT plays a key role within the crypto industry. Like when I buy my crypto, I buy using USDT. When I trade it, I use USDT. So now, considering the recent increase in stablecoin supplies, what role do you see for USDT in fostering liquidity and stability in the African market?
Good question. So obviously an incredibly important role. We've seen over the past couple of years USDT being used as a go-to currency in many African countries, and the main reason being it's a easily accessible dollar which can protect people against inflation and the depreciation of their local currencies. So it's filled a natural kind of hole for many consumers and even businesses on the continent. And Tether plays an incredibly important role, and part of what I'm trying to do along with some teammates is to engage players, engage regulators to figure out how to set up regulation, which is critically important. We've seen it now in South Africa, but that's specifically for kind of service providers and not yet specific to stablecoins. So something that will definitely come and that we're kind of trying to work with regulators on is stablecoin specific regulation, because it's incredibly important. So that's something I would say. And maybe also just to piggyback off your last question around where you see the market going, and I'm not going to talk about price, but I'm going to talk about adoption. honestly truly believe that stablecoins is the killer use case for many emerging markets globally, but especially on the continent. And I anticipate a tenfold increase in the number of retail customers or consumers using stablecoins, potentially without even knowing that they are using them. For example, on the back end of some payment application, they don't know that they're holding a stablecoin dollar, but it could be a dollar account, for example. So I'm very bullish on the adoption of stablecoins.
Yeah, I just wanted to ask you, like, what do you see the adoption of stablecoins be like globally, and especially in Africa? For example, Tether is pegged to USD. Do you think that all other stablecoins, or the majority of them, will be also pegged to USD, or maybe some other reserve currencies?
Well, the ones that work the best are the US dollar ones, just because of the liquidity in the US dollar market and the fact that a lot of people understand the dollar, a lot of commerce is done in dollars, international trade is done in dollars. So I think you'll struggle to kick the dollar out, but hopefully Bitcoin can do that at some point in the future. Not to say that there's not a place for other stablecoin or pegged currencies. For example, Tether offer a gold product, which is really interesting. They peg the value of an ounce of gold to a token, which is existing on the Ethereum blockchain. So that's an interesting one. But to talk to local examples, I expect that there will also be stablecoins specific to local fiat currencies. There are some already in South Africa. There will be some more kind of globally, for sure.
Yeah. I think there's one part of the crypto market that's actually still pretty misunderstood, which is the importance of dollar stablecoins for savings and for payments. I think it's the least sexy part of our market, potentially, because it doesn't go up 1,000%. People on Twitter will say tether to $2 whenever Paolo makes an announcement. That's not going to happen, I hope. But I really think one of the things that I'm super excited about is the ability for everyday people to access dollars savings in a cost-efficient and easy manner, and to be able to earn yield on those savings. I think for anyone in Africa, if you're able to earn 10% per year on dollar stablecoins, that's almost like a life-changing thing for most people, right, who have some savings. And that's part of the strategy that we're really interested in pursuing, right, is making sure that we're able to help people save effectively. That's an important mission, not can I give you the ability to trade an altcoin that might go up 1,000% or drop to zero. And so I really think that it's important work, and I think Tether's making great strides to making sure that this market is one that exists in the future.
I think like in the cases of crypto in South Africa, we haven't seen much development, but I read an article about you guys possibly going into insurance, into savings and all of that. So I think as the market grows and matures, there's going to be more adoption where things, like I think 2 years ago to buy any cryptocurrency was very difficult. Like if I went into Luno, I couldn't pay with my card. I had to go do an EFT. Then it will take 1 day to settle. Then the price of the Bitcoin will be different. Whether nowadays the transaction is instant, you can buy crypto with cash with a voucher. You can buy with your credit card. You can do an EFT. You can do all of that. So there is a lot more access for on and off ramps. And I think, Matti, I want to ask you about. Explain to us, USDT recently launched a product that enables users on Telegram to transfer USDT via peer-to-peer. Is it working in South Africa? How does it work? Have you seen like a great adoption yet in South Africa, or is it something that you guys are just starting with?
Sure, so it's not a USDT product. Effectively, they've just issued USDT tokens onto the TON blockchain. And that blockchain is the blockchain which is supported within the Telegram wallet. So Telegram have integrated a wallet. They have like 900 million active users in a given month. And all of those users now have access to this wallet, which they can easily kind of create and access within the Telegram. I mean, there was a chat on super apps before this. It's kind of like that. So now you have a wallet functionality, and within that wallet, you can hold USDT, US dollars, and you can send them to contacts as if you were sending a message. So unfortunately, I can't comment on how Wallet's doing in South Africa or Africa specifically yet. I don't have any data to kind of back that up. But if you look at the number of wallet addresses and the growth in the issuance of USDT tokens onto the Telegram open network, it's extremely high compared to other blockchains. So the supply, I think now is at around 350 million US. I need to double check that, but I know that the growth rates have been super fast. And I know that the number of unique wallets holding USDT has also been growing fairly exponentially. So yeah, a really interesting way to integrate within an existing chat application and to allow people to share dollar value in a peer-to-peer fashion. Ultimately with the goal of enabling payments at some point, like we want people to be able to spend their USDT at any shop in South Africa or globally, but that's all coming in due time.
So call it, I think for the USDT case, it's mostly people getting paid by international companies. Software developer gets paid in USDT just because the settlement is instant, there is no fees, it's a lot quicker. Now, Valar, you have something called Valar Pay. Can I use my USDT to go and buy something at ShopRite, Pick and Pay, Take a Lot? How does it work? How is the adoption? Are we seeing a high increase of people using crypto to pay?
Can I say coming soon?
Okay.
So presently what exists with ValorPay is the ability to spend Bitcoin to buy groceries at Pick and Pay stores. So you can walk into a Pick and Pay, scan a QR code, and in 2 clicks, effectively have a screen that shows you you're going to spend X amount of Bitcoin, which is worth the amount of the groceries you're going to buy. And on confirmation, it's immediate, like literally almost immediate, that the teller rings up and you've paid with your BTC. It's a great product. I think I use it. And we've seen a relatively good uptick in the amount of use by our customer base. For sure, it is not at saturation, right? Like this is something that can grow significantly from here, I think. So I think philosophically, right, just for a moment, I don't spend my Bitcoin because I want to save it. So the next step is for sure to add the capability to use any asset that you have in a Valor wallet, using ValorPay to buy your groceries at Pick and Pay. That's one specific use case. If I just take a step back for a moment, ValorPay allows you to send any crypto that you hold to someone's email address, cell phone number, or their ValorPay QR code on their app, instantly and for free. Yeah, so that's the payment product that we have started off this journey into payments with. It's a closed network. It's on Valor, right? It can be used to make payments, simple as that. It can also be used as a way to onboard other customers because I can send to your cell phone number, even if you don't have a Valor account, you'll receive an SMS that states, hey, like 10 USDT is waiting for you in the Valor account that you can now open. And if you register an account and verify that cell phone number, that money is waiting for you upon the time that you complete KYC. So that's our existing payments product and part of a suite of financial services that Valor is building out at this time. You mentioned earlier that we're interested in getting to other avenues. If I could just for a moment, like just explain broadly what we're thinking. We have a payments product. We have an exchange where you can trade assets. We offer futures markets, which for institutions are interesting because you don't have to hold crypto to get exposure to price movements in cryptocurrencies. That's a play on institutional adoption to an extent. And we have savings through staking on chain and a loan book that facilitates leverage trading on that, where our customers in time could earn significant returns on assets that they just hold on our platform. So all of this is in pursuit of a single place where you can basically do everything that you need to with your money. That's the idea.
Yeah, I think from my personal perspective is that I hope that we can include these crypto payment gateways into gaming, into sports betting, into money remittance and the likes of those. Because I would love to just buy stocks or buy forex with my USDT or anything, because then I don't have to go to the bank, I don't have to transfer. Then I wait for another day while the settlement could be instant. Now, you mentioned something. We spoke about Solana, we spoke about the meme stocks, we spoke about AI and all of this, right? So we have learned from the past on the NFT market, right? It was a bubble that all of a sudden grew very quick and all of a sudden it was gone. So now the sentiment is that with the growth of this meme, gaming, AI, there are some concerns of the pump and dump. And I think like a lot of people, myself, I'm personally watching what is happening in the market. what are the projects that are coming into it. But some of them have real value, like the AI ones, like the gaming ones. So from an investor point of view, what should you be careful of before thinking on investing on meme stocks, on AI, or anything? Because if I go to CoinMarketCap, they're all shooting through the roof. But then all of a sudden, I see like a whole bunch of them are also collapsing, which gives me PTSD thinking of the NFTs to say like, am I gonna lose my investment? So, as an investor in advice, because you guys are experts, like how do I select and how do I do my homework to say like, okay, this is a project that I can invest in?
So I think my advice to a first-time crypto investor would be, once you've done your homework, once you've looked at your disposable income, you've allocated funds to your children's school fund and retirement annuity and all other responsibilities, and you have funds left, yes, then invest in crypto. But stick to I would say the top 5 coins. Those coins have long track record, they have sufficient liquidity, meaning it's as easy to sell that crypto as it was to purchase the crypto initially. That's really important. At Luno, we do extensive due diligence on each and every coin we launch, and I think I would probably refer to Luno as an anti-hype crypto platform, right? Where we don't support each and every airdrop, or we don't list each and every new coin or new venture. We have a coin selection committee as part of our corporate governance structure at Luno, and the coin selection committee assesses each new trading opportunity or coin against a very, very strict and robust criteria. And only once the coin is vetted by that committee, we then initiate the process internally to make that coin available. So we currently offer around 25 coins, all being stress tested and being reviewed extensively. And we think that we do a lot of due diligence on behalf of our clients through the coins that we offer. Of course, there are a lot of other risks consumers and investors should be aware of. For example, scams and people that try and part investors, from their hard-earned money. And I think education is really important around that. And I think the regulation that was introduced recently will also address that, making it safer for prospective investors and investors to differentiate between a licensed crypto platform and a crypto platform that's not yet licensed and not allowed to offer those services.
Maybe what I'd add is, if I leave you with one thing to think about, it's that crypto assets, or the crypto asset industry, is a game of like 10,000 experiments that's happening on a frequent basis, right? People are testing live in production whether certain ideas have traction and can gain either a community or some utility, right? At Valor, the kind of heuristic that we use is that we're not here to decide for you what you would want to invest in. In no small part, our obligation is to provide you with access to the markets that you want to trade, right? Of course, there's definitely some diligence that needs to happen to ensure that we're not exposing our customers to risk, and we do that as well. But we're much more. Our approach is very much for people who want to have access to crypto. We want to be the venue that you prefer to use, and that probably does mean listing a number of meme coins alongside utility tokens and assets that are commodities such as Bitcoin. And honestly, I think the meme coin cycle that we've seen recently probably has some utility for some people. In no small part, like crypto assets build communities around them. This is true of meme coins, it's true of Bitcoin itself, it's true of Ethereum. A lot of the story that drives adoption is the narrative behind an asset and what people decide to build a community around, right? And some of these are actually long-standing. If you think of Dogecoin, which is listed on Valor, that is a meme token. It was made by someone who did it as a joke, literally, right? But it's stood the test of time and has a $20 billion market cap, I think. And so it's interesting to see these experiments play out in the real world. You should do your own research. You should build a thesis before you invest in any of these things. But I'm really excited about one thing more than anything else, which is hopefully it continues to be the case that crypto assets allow equal opportunity for everyone to access markets. That's not evenly distributed anymore, but it was absolutely true of Bitcoin and Ethereum, in that these things were launched into the wild, and anyone who was astute enough to understand the change that this would make for the world had an opportunity to invest alongside everyone else. There was no private round. There was no seed investor or VC who got a price that was 10 times lower than what you get. And I hope that continues. And I think that's a worthwhile experiment.
And adding just a little bit to your words about the experimental field of cryptocurrency, I definitely agree with you, especially when we look at the history. Like it tells us a lot during the last, once again, 2 cycles. I can't stop speaking about them, honestly. We have seen the rise for our ICOs in 2017 and NFTs in 2020, and then suddenly it's all dropped 90+%. And I'm sure, I can say for sure that I know that this time will be no different. The majority, the 95, 99% of all cryptocurrencies will drop 80+%, 90+%. And only the chosen one stays on the field, like Bitcoin, Ethereum, maybe something like Solana. Not something inside Solana, as for me. It's just, it's not about the price, it's just about the bubbly nature, I think, of this experimental field, because when you don't know how to evaluate the project, you start by evaluating it with your own money, and when everybody is so excited, they obviously evaluate it too high. So yeah, you just need to be really careful here.
Just very quickly to add, anyone can make a cryptocurrency, and naturally that means that 98% of cryptocurrencies are absolute shitcoins. So I would definitely follow Marius's advice of staying like within the top couple market caps where there's sufficient liquidity and where you can build conviction in what you're investing in, because the lower down the market cap kind of curve you go, yes, the more potential there is to make money, but also the more likely it is you're going to burn your fingers. So yeah, do your own research.
Yeah, so I think that's we heard from the experts. We reach our limit. So thank you very much to you for coming, and we'll see you next year.